Hello everyone, my name is Khan and welcome to the new video. In this video, we are going to learn about what is the order flow and how we can identify this order flow is mitigated or not mitigated. And also important thing is here that when we can use order block, because we have seen multiple order flow after break of structure. Then you see 2-3 order flow. Sometime what happen, market not create any kind of like order flow and sometime create a one order flow. In this case, what we should use, like order flow or order block. Okay, so in this video, I'm going to explain all these things in a detail step by step. These are two diagrams in front of my screen. You can see diagram A and diagram B. Both looks like similar, but in this two example, you can see difference between the order flow. So when market momentum is varies and create structure something like this, as you know, when market momentum is varies and create break of structure, and after break of structure, what are you looking here? We are looking for the sell after taking out the inducement. So where is inducement? Inducement the first pullback after break of structure. After this break of structure, for example, market create inducement at this point, maybe more push downside. Okay, but right now the inducement is here. And what happen here if market like push higher? Okay, so before taking out the inducement, you have to identify where is our unmitigated order flow. Order flow is a primary, order block is a secondary. When we are marking the order flow, then you don't need to wait for like a unmitigated like FVC imbalance like these things. Only FVC and imbalance use while we are marking the order block. Okay, so in this case, you can see here where is our unmitigated order flow. Order flow means the last buying momentum before the sell. In a bullish market, the last selling momentum before the buy. This is a very simple thing. In this case, where is our last buying momentum before the sell? First of all, you have to start from top of the move. In a bearish market, if market momentum is a bullish, then always start from bottom of the move to top of the move, right? In this case, this is our last buying momentum before the sell. It means this zone act like a order flow because this is not a single candle. This is a complete pullback and market push higher and then push downside. So this move we can mark as a valid order flow, right? And again, what happened here? You can see this is our one more pullback is here. The last buying momentum before the sell, right? And this is our one more pullback is here, the last buying momentum before the sell here. Okay, now we can see here three types of order flow is available here. So which one we should use here? First thing is here, remember at this point, this one is our first one and you don't need to mark as a order flow here. Why? Because this zone act like a inducement. This is our first pullback after break of structure. So we are not using this order flow, and this order flow act like a SMT, smart money trap, because just people are looking for the buy and sell on this selling on this order block and press keep small action and then fail. Okay, without inducement, if you are buying or selling any point, that means you are trading on SMT point. Now the next thing is here, this one is our first order flow and this one is our next order flow. So in these two order flow, which one we should use as our order flow for the high probability setup here? Let me explain one thing is here. After taking out the inducement, if market create any kind of like lower time frame confirmation, so we can use without any order flow and order block mitigation. Let me show you exactly how. So once price taken out the inducement, in a first attempt, if market create here any kind of like lower time frame entry, so of course we can plan for the sell, like market start pushing downside, taking out the inducement, push downside, mitigation and sell, right? So this is a process you need to apply after taking out the inducement, and this is only applicable if market create in a first attempt. What happen if market not create in a first attempt, create a small pullback and then market went up? So we should sell here or not? No, you don't need to sell here. Even this one is an order flow right here. Why? Because this one order flow is not high probability. You have to sell on next order flow, this one. This is our extreme order flow. So once price tap on it, this unmitigated refinement. So once price tap on this extreme order flow, so we can plan for the sell. You don't need to sell between this order flow here. Why? Because this one is a not high probability, right? Why? Because price can be a small reaction and then market went up to mitigate this extreme, and once price tap on it and create any bearish indicators, so we can sell here, because this is our last step when we can expect that market looking for the sell. Because at this point market can fail, but at this point if market fail, then structure will be changed, right? So this is our high probability zone for the sell here. So what happen if market fail the first attempt here, like this one is here? Okay, create small reaction but not able to create here any lower time frame entry and broke this high. So how you can deal in this situation? In this situation, we can plan for the buy till this extreme PY mitigation for the short term, not for the longer term. And remember, this is a counter trend buy. So how we can plan here for the buy? In this case, let me show you here. This is our low. It's a must be taken out. Once market taken out this low, we can plan for the buy. And also, if market break the high, push mitigation and then buy. So in this case, generally we can plan for the buy in a two scenario. First one is here after taking out the inducement. So where is market taken out the inducement? The previous low. So this previous low act like an inducement. That means we can plan for the buy at this point first. And this one is our next one is a pullback mitigation here. Why? Because the previous highs are broken, right? This one is a broken and push downside and mitigation, and we can plan for the buy. And remember, these two counter trend buy till the extreme PY mitigation here. PY means the unmitigated order flow. If there is no unmitigated order flow is available, in that case, how we can deal? First thing is here, if market not create here any kind of like order flow, so we can plan for the buy for the short term till this unmitigated order block. Maybe market create order block, something like this. Okay, so this is a second scenario when market not create order flow. So these type of situation you should use after fail the inducement in a higher time frame, and then market create any bullish structure, so we can plan for the buy short term till PY mitigation. Once price tap on it, simply we can use chalk and pause and like a flip anti-module for the main low, this one right here. Okay, so sell setup till this point, something like this. So this is a process to sell setup after taking out the inducement or tapping on extreme PY. So this is a simple and easiest way, right? Let me show you one more example here. In diagram B, we can see here, where is our inducement, right here. So in this case, we can see here, first of all, you need to identify where is our unmitigated order flow, because order flow is a primary, right? So this is our last buying momentum before the sell is here, and we can see clearly this order flow is already mitigated by the next pullback is here, right here. And once market mitigate this one, market went down. So this order flow is not, you have to use here, okay? So where is our next order flow? This one. It means if price tap on it, so we can plan here for the sell here, right? Why? Because this one is an extreme order flow is here, right? And what happen if market create here any kind of like order block? In that case, which one we should use? Of course, you should use this order flow, because order flow is a primary, order block is a secondary. That means if price tap here, like taking out the inducement, after taking out the inducement, if market create here any kind of like lower time frame confirmation, so directly we can sell here without any order flow and order block mitigation. We can sell here directly after lower time frame confirmation. But what happened if price not create like this one and market went up to break the high? That means this inducement PY failed. It means you have to wait for it to mitigate the extreme order flow. If order flow is available, then you have to wait for it. If no available, then you have to wait for it to mitigate the extreme order block, right? How? Like break this one, take a mitigation and mitigate this extreme order flow is here, because right now we can see only one order flow is available here. That means if price tap on it, so we can plan for the sell after chalk and flip anti-module. And for example, if there is no order flow available here, right here, only order block is available here. For example, like this one. So where is our high probability? High probability become this area here. Why? Because there is no order flow is available here, only order block is available here. So order block we should use on the extreme point is here, right? Only first one is area here. After taking out the inducement, this is our first area when we are looking for the sell, and this is our extreme area when we are looking for the sell. So this is a very simple process when you are marking the structure in a bullish market, in a bearish market, and looking for the buy and sell after taking out the inducement. In a first attempt, if market not create any kind of like bullish and bearish structure after taking out the inducement, then you have to use extreme order flow first. If no order flow, then you should use order block for the extreme point. So these 2 points you should use to marking the order flow, order block. So this is a process to identification of the order flow, and you can easily identify this is our unmitigated or mitigated order flow. Let me show you on chart, then you can understand more better. This is our Aussie USD chart in a 5-minute time frame. We can say we can use any time frame like 5 minute and 1 hour, 15 minute and 4 hour, as well as higher time frame. And you can use lower time frame as per the higher time frame structure. Like you are using 15 minute and 5 minute higher time frame, then we can use 1 minute as a lower time frame. If you are using H1 as a higher time frame, then 5 minutes for the lower time frame. And if you are using 4 hour as a higher time frame, then 15 minutes for the lower time frame, right? So in this case, I'm using 5-minute chart, and I will show you different time frame as well as. So this is our bullish structure here. Before this, takeoff structure, push downside. This was a taken out the inducement. And after taking out the inducement, what happened here? In a first time, market just create a bullish structure and market push higher. because just below it there is no unmitigated order flow is available here. After that, what happened? Market break this one, create choke, and to create a choke and pause, market close over it or break this one or just sweep the structure. In every scenario, market create a valid break of structure, market create a valid change of character in a higher time frame, and same thing applicable in a lower time frame. So this is a chop create here, push downside, and market taken out the inducement at this point finally. And after taking out the inducement, what are you looking here? Simply we are looking for the identifying the unmitigated order flow first. So in this case, there is any unmitigated order flow is available or not? Yes, of course. This was a unmitigated order flow is here, broken and mitigated by this pullback here. So this order flow is not mitigated here. So this order flow is already mitigated here. So what happened in the next one? This one is a next pullback is here, the last buying momentum before the sell. So once price tap on it, that means we can plan for the sell, but price create a small pullback and then break this one. That means market not able to push downside right now. Market need more liquidity and market can be break the previous structure to create new high. So we can't plan here for the sell setup right now here. Break the structure, sweep this one and lower time frame entry here and create multiple buying selling setup here in a contract in. Okay, you don't need to focus on this one. I'm just showing you on higher time frame base. I'm just showing you on higher time frame perspective, and then you can use lower time frame structure here. Again, what happened? Market push higher, taking out the more liquidity, and market push downside and break this low. It means the market structure looking for the continuation. I break this low. It means when market break this low at this point, that this break of structure confirm here, and now we need to wait for it to take out the inducement before to next sell setup. So after break of structure, we should use where is our inducement right here. So inducement after break of structure, first pullback is here right here. So once market taken out this one, we can plan for the sell right here. Look at the structure like this one. But what happened? Market push again downside and create one more pullback and push downside. So this inducement transfer here to here because market get new inducement, new pullback, so we can shift our inducement something like this one. Okay, so what happened in this case? Market push downside and how we can sell. First of all, you have to use where is our unmitigated order flow and always start from top of the move like this one. So in this case, there is any unmitigated order flow. Of course, this was an unmitigated order flow which is already mitigated. This one broke and pullback and mitigation. So that way we can't use this one. And the next one is here. This is our last buying momentum before the sell is here. So price create this one. This is our order flow. But this order flow is already mitigated by this side over here. So to mitigation any order flow, price must be create a valid pullback. Then this order flow become a valid unmitigated order flow to mitigated order flow like this one. Let me show you exactly what I mean to explain here. This one is our previous low here, right here. We can see multiple times price tap here or like this one here. This is a broken, this one mitigation, but this one is not mitigate here. This one is mitigate by this pullback right here, by this candle here, because this is a valid pullback and these are not valid pullback. That's why this is a not a like mitigation here. This is just unmitigated still. Once market came back and we get this one, so we can plan for the sell right here. Okay, if price tap on the order flow, but right now this is a normal structure. We are not selling right now, but this one is a mitigated here by this side over here. It means this order flow is not exist and we don't need to use this one order flow in a future. Okay, so how you can deal? First of all, after taking out the inducement, as you know, if market create any lower time frame confirmation after taking out the inducement, so we can plan for the sell. And also if there is no unmitigated order flow available, so you have to use the unmitigated order block. So where is order block? Order block always start from top of the move. Where is our order flow and order block? This one. This is our order block is here. So once price tap on it, so we can plan for the sell. So this one is our extreme order block is here, and this one is our one more order block is here, possibly at this point right here. Okay, so which one you should use here? Okay, because we have a two unmitigated order block and this is an inducement. First of all, you have to wait for it to take out the inducement. Once market taken out this one, which is already taken out here, and if market create here any kind of like lower time frame entry, so we can plan for the sell. And after creating a valid pullback like this one, push down upside and then bend down, again going high, that means this inducement entry is not valid here. And if market push downside to taken out this low, so we are interested here for the buy till this extreme PY, not this one. This PY is not high probability. This one is a high probability here. So once price tap on extreme, so we can plan for the sell right here. So we can buy here. Again, price push higher, taken out this one, mitigation, we can again buy here. And this process will be continue until tap on the extreme PY. Once price tap on it, create structure bearish, inducement taken out, and we can plan for the sell right here. So this area become high probability zone for the sell right here. So this is a process to identification of the unlimited order flow and order block and inducement. So once price taken out this one, and you have to switch here in a lower time frame. We are using 5-minute higher time frame, so we can plan for the sell after lower time frame confirmation. Look at this one. This is our inducement which is taken out here, and in this case we can see very clearly structure pushing higher high like this one. Take a one more pullback is here at this point, again going higher high and again push downside. So this thing happen here. Look at the structure here like this one. So what happen if market break the previous high and sweep this one? So if sweep this one, that means we are planning for the sell without any inducement. Why? Because once market sweep the previous high in a lower time frame, so we can plan for the sell on this unlimited order flow in a lower time frame is here. This is our area when we are looking for the sell. If there is no unlimited order flow right here, for example, so we can plan for the unlimited order block. But in a both scenario, this area become a strong zone for the sell. But you have to put the stop loss just above the high. And where is target? Target, we can set the main low, which is here. And also we can use Fibonacci level to extend the target. Let me show you exactly how. This is a Fibonacci point mark bottom to top here like this one. So this 1.618 is our target, first target, and second target 2.618 here. Generally we use 1.618 target. We can achieve easily, and 2.618 take a lot of time to complete this structure here. Let me show you exactly how we can take entry at this point. What happens if price close of it like this one? If price close of it, so in that case we need to wait for it to take out the inducement, something like this one, and go higher, so we can sell here. Otherwise take a one more pullback and mitigation and sell. So in this case generally we can plan for the sell at this point and at this point. So basically these two entry applicable if price close of the structure here in a lower time frame like this one. Okay, so let's see what happened next here. And this low is a broken here. So if this low is a broken, and we can immediately sell on next candle open here and put the stop loss just above the high. Where is target? Target the previous 1.618, almost 3R. And where is our next target? 2.618. So these two target we can set here based on the structure. And what happened if price failed this one PY here? And this is our level setting here. We can use here. Look like this one. You can save and take a screenshot. So this is our entry and this is a stop loss. And what happened if price failed this one? Okay, so in this case you don't need to worry about it. For example, if price go higher, that means this VI is not exist for the buy, sell. So we can interested here for the buy to the upside like this one, taking out the inducement and going higher high. So our base will be changed bearish to bullish again. Okay, so always you have to identify as a specific zone when we are looking for the buy and sell. If those zone break, that means the structure will be shift. You don't need to like buy sell randomly anywhere. Even your stop loss hit, market not change. No, when your stop loss hit, that means structure will be changed. Your structure will be changed bullish to bearish or bearish to bullish. Okay, so let's see what happened next after this one. Okay, so this is entry is a pushing downside right here. Okay, and let's see what happened next here. And this entry is not mitigate at this point. This entry is already mitigate here. Why? Because the structure broken and taken. Next entry here push downside, and we are interested for the sell if market create any kind of like another entry possible here. Okay, so let's see what happened next here after this one. Okay, pushing downside right here. Look at the structure here. This was structure here, push downside, again break the structure. After break the structure, we need to wait for it to taken out the inducement. In this case, there is no inducement, push higher, break this one, again taken out, break this one, push downside, another taken out the inducement. That means structure creating like this one. In this case, we can see this is our unmitigated order flow. Which one is here? Mitigate here, and this one is not mitigate here. And this is our inducement. So where is our area when we are looking for the sell? So in this case, we have a two PY. First one is the extreme. Why this is extreme? Because just for it, there is no unmitigated order flow here. Everything is mitigated here. Okay, and this one is only area when we are expecting that if price tap on it, so we can plan for the sell. And first one is the inducement, as we have done here. Okay, so if market create here any kind of like entry, so we can just enter on the extreme. This one is an inducement point, and where is stop loss? Stop loss just off the high, and safer side is just off the high, because I will use this one because this one that looks good here, and target the previous low which we are mark here. So this is area when we are anticipating that if price tap on it, so we can plan for the sell. Even price not tap on this unlimited order flow, we don't care about it. Main thing is taking out the inducement. Inducement taken out, we are interested here for the sell right here. Okay, So let's see what happened next here. Market trying to push downside and taking out this one, and this POI is also made here, okay, which is okay because this one POI mitigation, that means the probability of the downside is a higher compared to the buy, okay. So let's see what happened. Market trying to push downside and market finally hit our target, and both entry hit our take profit is here. And this is a very simple process to identification of the order flow and the order block and inducement. If market taken out the higher time frame inducement first, then you have to use lower time frame entry, then we can plan for the buy and sell. Simple. If market fail after taking out the inducement, then always you have to wait for it to taken out the inducement and then wait for extreme PY. PY means the immediate order flow first. If order flow available, then wait for mitigation, and then we can plan for the buy and sell. This is a process to sell or buy on extreme order block and order flow, on also taken out the higher time frame inducement. So I hope you learn a lot of new things, that how things actually working when market momentum is bullish and bearish, and after taking out the inducement, how things actually working in a lower time frame as well as, and where is our high probability PY for the buy and sell. If you want to next part of this order flow series to mitigate the extreme PY, then you can comment in a chat section. Then I will upload as soon as possible the next part of this order flow mitigation series. So in this video, enough for the day. And if you are new, subscribe our YouTube channel and join our free Telegram channel. Link in description. Go and check out. And I will see you in next video. Happy trading.